What if I told you that just 5 companies could have an enormous influence on the direction of the entire stock market? Would you believe me? Because right now, something very similar is happening on Wall Street, and there's one word behind it all: AI. Artificial intelligence has become one of the biggest forces driving the markets. But here's the real question. Are we watching the beginning of a massive economic transformation, or are we watching another market bubble forming? And more importantly, what could all of this mean for your money? Let's break it down. Over the past few years, some of the world's biggest technology companies have entered the same race. Whether they build advanced computer chips, operate massive cloud platforms, or run some of the biggest social media networks on the planet, they're all pouring billions of dollars into artificial intelligence. Companies are building enormous data centers. They're designing more powerful AI chips. They're expanding cloud infrastructure. And every earnings season, AI seems to be one of the biggest stories investors are watching. So what has happened? Revenues are growing, profits are hitting impressive levels, and the stock prices of some of these companies have climbed to extraordinary heights. For investors who already owned these stocks, the gains have been enormous. But this story didn't start overnight. It really accelerated with the rise of generative AI, technology capable of creating text, images, software code, audio, and even video. At first, many people thought of AI as just another useful technology, but businesses quickly realized something much bigger. AI could fundamentally change the way companies operate and make money.
And that created a massive chain reaction. Companies that manufacture the chips needed to power AI systems suddenly faced enormous demand. Cloud companies began selling computing power and infrastructure to businesses developing AI. And companies building AI-powered products started looking for new customers, new subscriptions, and entirely new revenue streams. In other words, money is flowing through the entire AI ecosystem, from chips to data centers, from data centers to cloud computing, and from cloud platforms to AI-powered applications. That's why some investors believe this isn't a bubble at all. They argue that this time there's something different. There is real revenue. There are real customers, and many of the companies leading the AI boom are already highly profitable businesses with strong balance sheets. Compare that with the dot-com bubble of the late 1990s. Back then, countless companies had little or no revenue, but investors were willing to pay enormous prices based on promises about the future. Today's AI leaders are very different.
Many of them are already generating billions of dollars in revenue and profits. And AI isn't limited to the technology industry anymore. Banks are using it, healthcare companies are using it, manufacturers are using it, retailers are using it. Businesses across the economy are trying to figure out how AI can reduce costs, increase productivity, and create new products. And if that trend continues, the companies building the infrastructure behind AI could potentially benefit for years. But there's another side to this story. Some well-known investors and market analysts are warning that investors may be getting too optimistic. Their biggest concern? Valuations. A stock can be attached to an incredible company and still be overpriced. The problem occurs when the stock price rises much faster than the company's actual earnings. And that's where some investors believe the AI market may be getting stretched. There's another issue that deserves attention. Some companies in the AI ecosystem are investing in one another.
A technology company may invest in a cloud provider. That cloud provider may spend billions buying chips and computing infrastructure from another company. And those companies may then invest in other businesses across the same ecosystem. Some analysts have described certain arrangements as circular deals. And historically, when money keeps moving around inside the same ecosystem, it can become harder to determine how much growth is coming from genuine demand and how much is being driven by investment flowing in circles. So now comes the question that matters most. What does any of this have to do with you? A lot. If you own stocks, mutual funds, or index funds, there's a good chance you already have exposure to some of the biggest technology companies in the market. Why? Because many major stock indexes have become increasingly concentrated in a relatively small number of giant companies. That means a handful of companies can have an outsized impact on the performance of the entire index. So if those companies continue rising, your portfolio could benefit. But if they suddenly fall, You could feel the impact even if you never personally bought those individual stocks. That doesn't mean you should panic, and it certainly doesn't mean you should sell everything just because people are talking about an AI bubble. But it does mean you should understand what you actually own. Take a look at your portfolio at least once a year. Ask yourself, how much of my money is exposed to technology? How much is concentrated in a handful of companies? Am I properly diversified? Because diversification isn't about predicting which stock will win. It's about making sure one mistake, one sector, or one market downturn doesn't destroy your entire financial plan.
The bottom line is this: the AI story is far from over. In fact, it may only be getting started. AI could transform productivity, business, and the global economy in ways we're still trying to understand. But whether today's AI boom eventually looks like the beginning of a technological revolution or the beginning of another major market bubble, we may not know for several years. And that's exactly why investors need to stay balanced. Don't invest because everyone else is excited. Don't sell because everyone else is scared. Understand what you own, understand the risks, and make decisions based on information, not emotion. So now, I want to hear from you. Do you think AI is a genuine economic boom, or are we watching an AI bubble forming? Let me know in the comments. And if this video helped you understand what's happening behind the AI market story, hit the like button and subscribe for more finance and investing content. Until next time, stay smart, stay informed, and protect your money.